Hey, you're caught in the net, but don't get caught in the ledger. You should ask a bookkeeper. Well, you tuned in right at the right time because this is Ask a Bookkeeper with Stephanie Conley, brought to you through the financial support of Steph's Bookkeeping. Check her out at www.stephsbooks.com. Today, round 2 of the PPP.
Yep. Yeah, so I figured since I'm getting so many phone calls from clients wanting me to look through and figure out if they qualify for the second round of the PPP, I figured we do a whole show and hopefully everybody watches this so I can stop getting interrupted with these questions. Because it's tax time and
Yeah.
I have a lot of other things I got to get done. So, okay, so everybody that went through the first round of the PPP, if you had a loan above $150,000, you probably have submitted in for forgiveness. The SBA is still editing the form for under $150,000 for your loan, and I know that they're doing maybe like a short form, which would be really cool. So that should be good there. So now they've implemented the new PPP round 2. And so for qualifications for that, you could either be you could be your first time. So this could be your first one instead of your second one. You could be a previous candidate that had qualified. So they're not discriminating there, which is nice. It is on a first come, first served basis, just like the first one was. So please keep that in mind. So if you are interested in getting the PPP for the round 2, then you should definitely get on that sooner rather than later. But you do need to have some clean books in order to figure out if you qualify, because you have to run your comparative revenue reports and you have to have a 25% loss in revenue, 25% or more loss in revenue comparatively from 2019 to 2020. So I'll show you in a few minutes on how to pull those reports from the sample company in QuickBooks Online. And also with the PPP round 2, there is a little bit of greater flexibility for how the funds can be used. So before you could only use it on wages, rent, and utilities. Now they're including some essential goods. So if you are a reseller of a particular item, you could include those, because without those items, then you have no business and you can't get any revenue. So that's nice that you could include that, and operational specific softwares. So like QuickBooks, you can do that. Or if you have industry specific software, you can also include that in your PPP funds for you to utilize that. And then you also have less than 300 employees. So I'm assuming that most of the people that tune into the show probably have less than 300 employees, since we're really looking at those small business owners and micro business owners.
A couple more hires and the station here will be over that.
So, well, then you guys better get in now while you still have the opportunity.
Way better.
And so let's say everything you look through on the SBA website and you believe you're going to qualify for the PPP round 2. So you would log into your QuickBooks or accounting software, whatever you're using. And then you would want to go to your reports. And then you want to pull your profit and loss. And since you're doing it by quarter, that would either be from January 1st through March 31st would be first quarter. April 1st through June 30th is second quarter. July 1st through September 30th is third quarter. October 1st through December 31st is fourth quarter. Just so you have that, so you know how to separate your dates. So you could just go to the date boxes, pull the quarter. So I did first quarter, so January 1st through March 31st. And then if you have QuickBooks Plus or Advanced, I know it has the comparative to another period report. So you would just use the drop down, previous year, check the box, percent change, check the box, and then hit run report. Well, unfortunately, Craig's Landscaping didn't have that. So it would normally populate the revenue and, your normal profit and loss, how it looked on the screen before I edited the dates. So it would pull up like this. And then over here in this column, you'd have the 2019 numbers. And then next to that, you'd have the percentages of the change. So you'd want to change of 25% or more in reduction for that year. So 2019, you needed to have done more revenue than in 2020. So hopefully that makes sense. So if let's say you had QuickBooks Self-Employed or QuickBooks Simple Start, you can't run that comparison report in there. So you'd have to manually run the report. So you'd run so I'm going to go over
So is there a place for the first round of PPP in here? And is that part of your income?
So the first round of the PPP would be considered a liability because it's still considered a loan until it's forgiven. Once it's forgiven, then it would go into your other revenue section of your business. Okay. So if you didn't get it forgiven in 2020 and you're getting it forgiven in 2021, then that might potentially help you because you don't have that revenue. So that's going to sit over on the balance sheet in the liabilities until it's either forgiven or until it's paid off. So whatever you don't qualify for. And then both loans are at a 1% interest rate. So whatever doesn't qualify when you have to submit your supporting documents in, it's fine because it's not that bad. It's only 1%. That's you being a banker. That's pretty good percent on an unsecured loan.
Yeah, it's a real good one. It's only about 12 points lower than what it normally is, right? Yeah.
So it's not like you're really going to get money at that rate. No, normally unsecured. So, to figure it out manually, which it looks like we have to do here, I have a formula, which I'm also going to put on the screen so you guys could write it down because it might be easier to do that because I know it's hard to follow math sometimes.
And of course, you're listening to 216 The Net. If you want a little bit more information from our good friend Stephanie Conley and her expertise, feel free to reach out at stephsbooks.com and she'll be able to help you out with that. Now, this year, 2021, with the show, we're going to do something a little bit different, folks. So we're going to want you to ask a bookkeeper. So even though we're talking about PPP, you may have a question today. It's okay. Nothing's off the table. So really the last 10, 15 minutes of each show, we want to address some of your questions. So if you have some questions, get them ready. And at towards the end of the show, the last 10 minutes, go ahead, put them in the comment section, and Steph will answer those. That's why it's called this year, Ask a Bookkeeper.
Yes. Yeah. So if I'm in the middle of a topic and you just happen to tune in and there's a question that comes to mind, by all means, go ahead and put it in the comment section. We'll get it answered. Who knows? It could be a question that warrants a pretty lengthy explanation and demonstration. So that could qualify for our next show. And so you never know what's going to happen with that. But yeah, any questions you guys have with regards to QuickBooks, bookkeeping, just feel free to rifle off the questions. I am a QuickBooks Pro advisor, so in theory, I should be able to answer the questions about the software.
We hope.
So let's say you have to do a manual calculation to figure out the percentage change. So to compare your percent change, you take the old value. So obviously 2020 has to have the reduction. Oh, it doesn't share this screen? I have to switch it.
Yeah, if you do it.
How do you switch the screen?
Let's go to your share screen.
Oh. Let's see what happens now.
Yeah, we're good. See, it's all this new fandangled stuff.
Window application. So I want to share this one. Okay. No. Let's see what happens.
We'll get there. Ready?
Did it work?
Yes.
Aha. Okay.
Hey, look at that, folks.
I'm so tech savvy. It's amazing.
Fantastic.
Okay. So obviously, when you pull your quarterly report, you want to make sure your 2020 revenue number is less than your 2019. If it's more than, then obviously you don't qualify for that quarter. So you just need one qualifying quarter out of 4. So once you figure that out, you take the old number minus the new number. So 2019 sales number minus 2020 sales number. So in the example it gives in this math thing that I found, so if you have 5 books and now you have 7 books, you take, so the change is 2. So you subtract the old value from the new value. So 7 minus 5 is 2.
Oh, yeah. Still.
Okay.
Even with new math.
Yes, even with new math. Then to get the percent change, you would take the 2, so that's from the first part of the equation, the 2 divided by the old value, which then will give you your percent change. So 7 minus 5 is 2. 2 divided by 5 is 0.4. And then you move the decimal over 2, and that gets you your percent. So it's 40%.
Nice.
So that's how you would do it to figure out the manual calculation. So you'd want that to be 25 or more percent.
25 or more.
And then once that's figured out, then you could either contact your previous company that you were using for the first round of the loan. So I know BMO Harris, if you're doing, I believe, a smaller loan, they just, you go through the application, they ask you if you qualify, you say, yes or no, and then you're obviously attesting to on the application that you're providing, accurate and truthful information, so don't lie on the report. And then they are giving and releasing the funds of the same value that you received on the first round. So if you received the first one, second one, most likely going to be the same if you used BMO Harris. Bank of America, I know from talking to some people, are requiring the supporting documents up front before they will determine qualifications and release funds. I think Chase is also doing something similar. So those were some of the banks that, some of my clients or other business owners that I know use. So they kind of gave me the insight on those. And then if you didn't qualify for the first round or if you're unsure of how to do it and your bank isn't qualifying you, I do have a contact that you can call to see if he could do something through a secondary lender that's not a bank also. So, and the loan will still adhere to the same guidelines and the same forgiveness process and everything like that. So nothing's going to change or be different.
We do have a question out there. Dawn Bremer. What are the supporting documents needed?
For round 1, you need your payroll report. So you would need your payroll summary report. So let's see if we can change screens again.
Let's do it. This is exciting.
Let's go back to good old Craig's landscape and see if that did it work. Yay! So you would go to your reports and you could search for payroll. Well, Craig doesn't have payroll, but you would pull a payroll summary report for the dates that they're requesting on the forgiveness application. So you'd either pull that in ADP, Gusto, QuickBooks, whoever you're using your payroll with, and you could supply. So if you didn't hit the percentage, the 60% or 75% of wages, then you would provide your utility bills, your mortgage interest, or your rent to get to that 100% of the value of the loan. And then if you are a sole proprietor and you don't have payroll or sole proprietor or an LLC, you'll need your Schedule C from your taxes.
And Dawn, thank for being the first person with a question today. If you stop by the studio, we do have some nice Steph's bookkeeping advertising pieces. So something a little swag, I guess we would call it. So stop on by 216 The Net Studios and pick up your Steph's bookkeeping swag. Thank you.
Yeah. And so, and then for the second round, it would be the same supporting documents, payroll, Schedule C, and then your utility bills or rent, like cleared checks for rent. And then that would be that. But I'm waiting to see what happens with the short form for the loans under 150,000, because those might not need as much information. But I know that the SBA is revising them again for maybe the 6th time. And those are coming out at the end of February. So we'll see what happens with that. So if there's anything super exciting on them, then obviously we'll dedicate another show or converse or partial show to that to get that up and going.
Wow.
But
okay, again, this would be the time where we're going to open up some of the lines. Feel free to ask a question. Dawn, thank you for reaching out, asking a question. Linda says, hi.
Hi.
And Linda, nobody needs to know that you're related, but go ahead and just ask a question. Not
the question you just texted me, though. Yeah. I'll answer that after the show.
Yeah. Nothing private. Something to do with bookkeeping. That is it.
So I know that from what I've heard from some CPAs is that some of the lenders are accepting mock Schedule Cs. So if you are somebody that files extensions and you need to kind of plug and play your numbers off of your profit and loss, I don't think they're being as discriminatory as they should be. But they're not requiring a sign off from an enrolled agent or CPA to confirm the Schedule C, as long as it matches your profit and loss.
Do you know, is the process easier staying with the original? If you had PPP the first round, is the process a little bit easier the second round if you stay with the same financial institution?
Some of them, yeah. Some of them aren't. Like I said, some of the financial institutions aren't requiring any documentation beyond the loan application. So, like for the first round, you would have had to provide your payroll report in advance and your Schedule C for them to determine the value of the loan. But since they already did that, they are just kind of approving you for the same dollar value. Mm-hmm. You're welcome, Don. And so that would be an easy process, but some of the lenders are requiring you to put all the supporting documents down first. And then if you still qualify, like if you still actually have payroll or still are in business, they want to know. And then they'll potentially release the funds at that point. And then for the forgiveness, that's when you would upload into whatever their portal is.
There you go.
So yeah, typically I would assume it would be easiest to stick with the same lender because it's not like anybody's offering competitive rates. Right. And if anybody's telling you that, then you're applying for the wrong loan.
Right.
This is all.
We can get this PPP at 5% for you.
Yeah, it's all regulated by the SBA. So ultimately, if the SBA forgives, like let's say there was talks, whatever, like a few months ago that there might be an auto forgiveness for loans under a certain dollar value. Mm-hmm. But at the end of the day, even if the SBA auto forgives it, the banks or lenders should still ask you for those supporting documents regardless, because if they can't prove to the SBA that that was an actual valid PPP qualifying loan, then the bank or the institution is on the hook for that money. Like you might not be, but the bank will. So, and you don't, obviously want to tarnish those relationships, especially if you need, funds in the future. So that's something that, that the banks and the financial institutions, need to keep in mind. And that might be why some of them are requiring just to have all the documents up front first versus just releasing the funds again for the second round.
Right on.
And so, and also I had a client last night, we were talking about the PPP and how they said that they talked to some people and it scared them into not applying for the PPP. And they were a business that, in my opinion, probably should have applied. And so we were kind of chatting about it, and they weren't fully understanding when you transfer it from being a liability to then becoming your other income and how that affects your tax liability. So if your business showed a profit and then you had the loan forgiven in that same year and it got transferred over, then obviously your profit's going to be higher by whatever that dollar value of that loan was. So what I was advising clients to do that were at potential risk for that, especially the LLCs and sole proprietors, is that whatever your normal income tax bracket is, so, 25% or whatever it is, when you got the initial funds from the first round or the initial funds from the second round, put the 25% away in a savings account. Because if you're showing a profit and then you add more profit onto it, you're going to have to pay that income tax. But paying 25% back and keeping 75% of free money is way better than no money and paying, and kind of being on the struggle bus with certain components of the business and having to personally fund the business. I'd rather have 75% of that then.
Yeah. And I mean, you said it before on a previous show, and I've talked to some small business owners who have done the right thing too. Is they got the first round of PPP and they set aside their tax money right away, right? Like, whoop, we're going to set this over here and not touch it, just in case. Whatever. And so it's kind of a smart thing to do too when you first get. I mean, don't act like you just won the lottery. Go out and buy a big screen monitor.
Right. Or you could be like the guy in Miami that bought what do you buy, like a Ferrari or something?
Yeah, for the business.
Yeah. So but yeah. So I would have I would recommend just putting a percentage of it away, because once that goes into the income category, there's a potential you're going to have to pay. If your business is showing a loss and you put it over there and it's still showing a loss, then that 25%, might just be monies that you then had for a rainy day. So you're welcome. But, right. It's better to be safe than sorry, especially when it comes to the Uncle Sam, because he is not forgiving with those penalties and interest. I can tell you that.
Doesn't have a real good sense of humor.
Yeah. Right. Yes, his sense of humor is lacking.
Right. Oh, I don't know what happened.
There.
Oh, that's interesting.
We're trying out all the new screens, so hopefully you guys let us know which one you like the best.
That's right.
Which one was easiest to read.
I'm enjoying that.
But yeah, so that's kind of my 2 cents on the PPP and the round 2. So
So if anybody wanted to, if they're a little shy and or they're just listening, they're part of the 2.1 million listeners out there on the radio, how do they get in touch with you if they have a question?
Oh, they could give me a call at 847-942-3004. They could email me at steph@stephsbooks.com. They could go on our website, stephsbooks.com. They can find me at my office.
Reach out to us at 216thenet@gmail.com. Just say, hey, here's a question for Steph, and we can certainly make sure she gets it. Her office is fairly close to ours.
You just send it private messenger?
Yeah.
Or courier?
Send it Uber.
But yeah, feel free to reach out with any questions. If you, didn't want to post them publicly on Facebook, we'll be more than happy to answer them. And, we could do a review and make sure that you don't have, weird historical stuff sitting,
So
or duplicates or whatever for your revenue, just to make sure it's all clean.
So you've got a pretty good book of clients yourself that you're helping out. And as you stated, I don't know if it was online. It's been a very long day for me. So I don't know if it's been online or we did it in the green room. But it's tax season, right? So you're doing a lot of work. So if I'm a new client, do I jump to the top of the pile or how does that work? I just want people to know that this is where you make your hay. And so if if I need an immediate answer, my back's against the wall and I come to you, does it happen quickly?
Well, I mean, if you have a question, I'll be more than happy to answer it, even though, it is kind of our busy season right now. But if you are looking for us to do a cleanup or a review or something to that effect, depending on the volume of the cleanup and the structure of the work would determine, like, for example, if you're an incorporation and you don't want to file an extension, your taxes are due March 15th. If you're a sole proprietor or an LLC, you're due, April 15th. So right now we're prioritizing our current clients.
Better get on the stick.
Right now we're prioritizing our current clients that are incorporations to get them done and over to their CPAs, obviously, so they could file on time. If you contact me like March 1st and you still want to file on time, then you will probably, I'll just let you know up front that you're probably most likely going to have to file an extension. So we'll be upfront and honest as for where you'll fall in the line of work.
Yep.
Unless you want to pay triple the rate, then I'll put you to the front.
That's right. Money talks. There we go. Absolutely. And again, folks, you've got 21.6 the net. You're caught in the net. We appreciate it. Ask a Bookkeeper is on the first and third Fridays every month, right at 3:30 Central American Time. And please, if you have any questions, that's why it's called Ask a Bookkeeper. She would love to answer those questions. Now, she doesn't. She's not a psychic. That's Saturday morning's show. So don't ask her about love relationships. But if you got a question about QuickBooks, she is an expert. So, don't be afraid to ask questions. Now, the other thing is that I just want to take a quick second to shout out is join us tonight at 6:30. Join us tonight at 6:30, where you'll be Whining with Dawn. Now, Whining with Dawn is a panel of ladies who are sitting around drinking a little bit of wine and having a little bit of fun. And tonight, the founder and CEO's wife is going to be on her Dawn's show talking about the date that she and the CEO and founder of 21.6 Net DDOE Enterprises went on. So it could be very, very entertaining. So I would tune back in for that one. And get a glass of wine and just enjoy.
That's always a good show.
Yeah. So.
But yeah, and then so we're always looking for, I never know what you guys really want me to demonstrate and talk about, because what I find interesting from a bookkeeping perspective might not be the same like level of interest as numbers. A normal business owner. So I would be more than happy to entertain any show ideas, suggestions. So please feel free to reach out. You could email me at steph@stephsbooks.com. Or if you're a business owner and you've kind of gone through an interesting struggle and come out the other end, we would be more than happy to have you on the show as a guest. You could either Zoom in with the new software or come to the studio and sit here with us and talk about being a business owner and things that you've learned from, reviewing your numbers and putting together goals and matrices and stuff like that. So just, I guess, have a great weekend, stay warm, and we will see you in a couple weeks.
And remember that being a business owner is more than just posting positive quotes out on Facebook. Thank you very much. There's a lot of business owners who do that. That's why I said that. It's great. Hold on. Let's get the music to play out. Here we go.